And good evening. This is the Elliott Wave update for the NASDAQ 100 for Sunday, June 5th, 2022. The markets on Friday actually surprised me a little bit. I felt that we'd have much stronger follow through to the upside, but as it started out and we came in and it was already down, that became obvious that upside was out, downside was in. So, but once it did kick in, it was not, again, not the easiest trading day. There were a lot of fits and starts. There was a lot of periods of not uncertainty. And so it wasn't the best of trading days, although ending pretty directional and easier and then able to make some good money. But if you didn't trade the whole day, it could have been a little bit of an uneasy day, let's say. But here we are. We made it through Friday's expiration. We're now still within what I am going to continue to call a very difficult period for the markets because of the continued flux back and forth on all of what's going on around us. So how do we want to interpret that into the market is just, in my opinion, a little bit impossible. It's all going to happen one way or the other. To take a position to think this is going to be the outcome or that's going to be the outcome, I think is where the danger resides. Being more in a position to where we have the ability to go to these levels or those levels, that helps to determine a path, that helps to determine where things could turn in this daily picture, an hourly picture, et cetera. So what I want to just say again is that, yes, we're confronting a lot of different things, and we're getting a lot of information to those things. One of the information that I received and then have gotten again was, if we remember back in March, it was a very large monthly expiration, or that next quadruple or whatever they want to call it, because it's a quarterly. It's the expiration that happens on the third Friday of the month for the quarterly. So it's a quarterly expiration, June. So we had one in March, and we saw $3.2 trillion settle. That's the amount of money across all of the options contracts and derivative contracts that settled on that day. It equated to $3.2 trillion. And now we are entering into the next that promises to be bigger. So again, I don't necessarily want to factor that in, because as it gets to that point, we have a lot of speculation. So what are the probabilities of something developing, and into what direction and why? Now, what I do here is I take it and I look at the market and I make a decision that I need to discuss and talk about an upside view and a downside view. Now, that's not wishy-washy. That's not picking sides. But what it does do is leave me in a position to, if it does want to move up, I have some parameters I can put around it. If it decides to move down, I have parameters I can put around that. And if it continues to fulfill those parameters, hey, guess what? This is what it's doing. So that's the purpose of my analysis. That is what I am attempting to do and then share through these updates. So let's get down to it. In the NASDAQ, Friday's expiration produced a stronger down day. In fact, a pretty strong down day, with the NDX, the cash market, being down 344 and the Dow being down 348. So everybody took a little bit of a smack in the jaw on Friday and during expiration. We are initially opening a little bit stronger, but now the NASDAQ is beginning to fall again. Now, where does it leave us? We came in. I'm going to leave this count as is right now. So I am looking more favorably at 11,491, which we reached on May the 20th. That low is continuing to be the low of minor wave 1 of intermediate wave 3. So what I'm describing right now on the intermediate degree, which takes all of this action, that's all on an intermediate degree. Here's 1, here's the 2. What that tells me is that we're in, on an Elliott basis, the longest and the strongest wave of a 5-wave sequence. This one happens to be going down. Intermediate wave 3 going down. So possibly we've only completed the first segment of this larger 5. So wave 1. So we're still in a wave 2. Now let's put some parameters around it. If that's the case, and this wave 2 is going to be a definitive A, B, and then a C, we need to wrap some parameters around that. The first one that I want to take a look at is, what are the parameters for a wave 2? That larger wave 2, and it's a minor wave 2. So I need to take into consideration, come on. All right, I'll go in and fix this. Hold on. Need to just drop this to 91. And that's that, 5309. And that high was 268.75. Just change that. And we're good to go. All right, so we have reached and gotten a little bit above 0.382. As is for wave 2, these are retracements. It's gotten above that. Last week on Friday, we did get up very early, right in the start of the Globex session, Thursday to Friday, we got up to 12,945. Then we totally backed off that session. So if anything, this is part of B, maybe all of B, I don't know. We're on the daily. So I'm going to drop down to the hourly chart, and we can see, and that needs to be up just a little bit higher. All right. And you can see where it got to, and now we're coming off. But again, it looks like we're coming off again in a 5, which makes this as difficult. But I am looking at this as being a 1, a 2, a 3, a 4, and a 5 for an A wave. And then I'm looking for a B wave down. And that B wave is going to be an A, a B, and a C, and I don't see it yet. That looks pretty 5-wave-ish to me. And in fact, this looks very much like a triangle quickly reaching its level. We'll reach a pinnacle and swing lower to finish this, which could bring us down back again to a small break below the hourly 200 and then likely bounce again. So if we're getting a 5 down, that's A of B, and then we get a B, and then we're going to get a C. So we still got a lot going on, but we have potential. Upside, right, sitting up next, if it turns and runs all the way back up, back above 12,900, which a C wave would require. Again, with this June expiration, which by the way is June the 17th, I don't have any indications as to what side is going to be big, other than just the number of contracts and that will settle and on that day, on June the 17th. So if it's going to be settling out long, settling out short, that's how much money will be changing hands. Now, what if it just builds to the upside, which there's still a lot of chatter about, there's still a lot of talk about. So now I want to take a look at that on a Fibonacci basis. And if this is a C wave to finish a wave 2 often comes up 50 to 62% of that wave 1. Those levels are 13,380 and 13,825. I am by no means saying that's what's going to happen. I'm saying if the market's determined that it's going to return higher and we break back above 12,900, I'm looking for it to get to at least 13,040-ish. And if it breaks that, then I'm looking for 13,380. I've got the 200 sitting at 14,181. Can it get there in a wave 2? Sure, it can. But it's going to have to push. Now, can it get there by June 17th? Yeah, of course it can. No doubt. So we have that staring us in the face. But by the way, from where we are, it's well over 1,000 points. So that would be a pretty big move. But can the market do it? Yes, we've witnessed it. We watched it right here. They just took it. And that's 15,268. And it started at 12,924, 942. So yes, the markets can do these things, hands down, no problem. So that would be our upside scenario. 50 to 62%, 13,825. In the next 2 weeks, quite possible. Now, there's just as much out there that can turn this market lower. They came in and just sold it on Friday. The anticipation on many minds is that there should be follow through coming in today. Again, it depends on how everybody came out of expiration. That will be important. So what can a downside scenario do? If they break, which is now held twice on Friday, twice, they did not get it back below or they haven't gotten it back or haven't gotten it below, the 200 moving average. And if it does, I expect there's a lot of stops, and those stops are to sell. We might get that initial plow and then rally. Keep it in mind. So be careful on trying to sell on a break below that level on the third time. You'll get a little bit of a move. So as a scalper, should be a good trade. Beyond that, you run the risk of it. You better wait and see if it comes back up, holds below that 200, and you'll catch the second entry. First entry, if you're a scalper, you should be okay. If you're positioning it a little bit, you might want to make sure it gets through it and stays through it. So if it does, then we're heading towards that 12,382 support. Breaks there, we had little points, so that's a little bit of a zone. 12,320 down to 222, so about 100 points. That's going to be some support. Then we have breaks below. Our next more important support, again, if this is done as a wave 2 and we're coming off in a wave 3, then we're going to be making some serious downside action. And what can propel it? I don't know. We'll have to wait and see. And again, June expiration could have a big part in it. It depends on, again, not knowing which side truly is going to be in play more. We'll have to wait and see. So, but downside can get turned serious. And if it does, I'd be looking for it to eventually get down to here. Now, from where we are, we're talking 1,000 points. So it's not, if it happens in one day, we're crashing. So let me get that clear. If it happened tomorrow, we are crashing. If for some reason the market's like ditching everything and they don't care, of course, that's going to come in and be of a crash. So all things are on the table. But again, for tomorrow, we have our upside, and it has its work cut out for it on what it needs to do. And can it do it? Sure. But that seems to me that we're likely going to get a little blip and then blip. And then we'll go from there. Okay, I'm going to leave it all there. And the next update will be on Monday, June the 6th.